Welcome back, legends and legendates. I'm going to do a quick market update. And so, looking at this Bitcoin chart so far, we've actually had a massive run as well from October lows to the current break, which is just over 85%. And then what happened was we had this rejection of that key resistance. It was actually a false breakout as well, because we had this key resistance left behind from 28th of March 2022. And then once we tagged it, we actually had a false breakout, as you can see in the lower timeframes. So you can see, for example, here, we rejected off this level here, and we grabbed the liquidity and we went back into the range. So that was a nice short setup. So what now? What do we expect next? So a couple of things I want to actually talk about in this chart. So we've actually had this bit of a range here. We had this breakout and we fell back in the range. And of course, we had so many news events this week. For example, FOMC. We had this decline here. And of course, there is this imbalance here left behind after the sell-off here. So you can see this gap here, particularly in this chart here. There's a red candle here and a wick here, and wick here is a gap which has not been filled yet. And so there's two couple scenarios really I can really think of in terms of Bitcoin. The first situation is that we reject of this macro Fibonacci. And Fibonacci is really a tool which I've really drawn from this high here to this low here. And this is potential retracement areas in terms of the Fibonacci. So the first point is the 0.5. So this is roughly at 43.8k. Then another potential situation is push up to the 618 or 65. This situation is actually what I prefer really to take a short rather than this one. Of course, we could dump right now. But yeah, the first situation is a rejection right now and then dump to 37.36k. Test some really untapped points of controls. And untapped points of controls is just high volume areas left behind and which are unmitigated from prior areas. So we could actually reject here and dump to here. Or second option, the option that I actually prefer is a push up and we tag this 0.618 or 0.65 Fibonacci. This would just be a deeper retracement essentially. And it will not be out of the realm of normality if this happened, because sometimes when this is actually a high on the daily chart. And so sometimes when you have a dump like this, you get a lower high and then a breakdown. So regardless of wherever it rejects from, I would expect at least 39.1k or even potentially 37k to 35k to really tag some of these untapped high volume nodes or key pivots. Something else I also want to talk about is the fact that we have, of course, the daily EMA, which is actually coming in around here at 32.5k, 32.6k. And so there's still a chance of actually tagging that. And as you can appreciate, as this is lagging, so as the price declines, if we do get a decline, this will start to lag upwards as well. Of course, there's a chance of just going straight at 52, 53k. But again, this is a game of probabilities, not certainties. And it's about managing risk and taking high probability setups and letting edges play over time. It's very normal to think that we're in up-only mode only. But the reality is that we have actually had a huge increase this year so far. And so you would expect some sort of pullback eventually. Again, there's no guarantees for all-time lows. But there's a chance, of course, for example, key levels, for example, between 28k, 29k to 30k potentially be tested. For example, we have here, if you look at this chart, for example, we had key resistances. So this was a key resistance left behind in 2022. We broke above and we back tested, push above, we back tested again. So the next unmitigated one is really this zone here. So this is a resistance left behind from April and July. And we had a huge run up and we haven't even back tested it yet. So this comes in really roughly between 30.1k, 30.2k, that sort of region. And so there's, of course, a chance to test back here, more, thinking a more macro point of view, potentially in the next couple of months. In summary, there's two situations that I'm really looking at. Option one is a rejection here at the 0.5 Fibonacci, and then we have a dump and test some of these untapped, unmitigated points of controls or pivots. Option two is have a run up and tag the 0.5, 0.618, and then dump afterwards. And then we'll see what happens. But guys, this is a quick market update. Do like and subscribe my YouTube channel. And of course, please put down any specific video requests in the comment section below.